viewers across the globe. Welcome to our weekly video on Forex trading analysis. In today's video, we're going to do something different. I'm going to walk you through the world of trend lines. What is trend line? How to use trend lines to make profitable market. And to start with, I will leave you to ponder over this as we go into our intro. And when we come back, I would want to clear your curiosity. Stay back and relax as we play the intro. Welcome back. Yes, I've talked about trend line, and you must have heard this multiple times, and you have also used it one way or the other, or as a beginner, it's one of the common tool that you have seen people draw and then use. So before I go into trend line, I want to define the concept. This concept of you've heard of the 20-80 rules. 20-80 rules is a Pareto concept that 20% of activity driving 80% of the value. In other words, if you are looking at a volume, that okay, what effort do I put into this volume? The concept is derived from the use of lever, where you have to lift a weight that is bigger than yourself, and you have to place a lever, and then you mount you apply small pressure on the lever, and it moves up the entire weight for you. So that phenomenon is what I want to relate to trend line itself. Trend line, as common as it is, will give you bigger returns on your trading if you apply it correctly. So I would start by showing you the basic trend lines, which is actually this, connecting left to right, or yes, left to right upward, left to right downward, or even horizontally. You could actually draw a trend line like this. This is trend line. But how does this line, this common straight line, how does it give us returns, the desired returns, as I have mentioned? So what I will do, I will begin to use this to analyze the chart for you, and towards the end, I will give you a powerful combination of this trend line that will always give you rest of mind when you are looking at a chart, or when you have entered a trade, or you want to enter a trade. Okay, so for that, please watch this video and don't skip any part of it from start to the end. Now, this is our chart. Let me start here. Trend line here is for me to determine the trend of the chart. As I said in one of our previous videos, we do advise that when you want to trade the trend. The trend is your friend. Just remember this common statement, that the trend is your friend. So always trade the trend. What do we mean by trade the trend? Trade the trend means your trading decision should happen along the direction of the market. If the trend is downward, that is, you are having lower low, lower high, lower low, lower high, make sure your entry position is guided by that trend. How do you know that this trend, if it's a downtrend, that the trend is getting over? Or how do you know that if it's an uptrend, that the trend is almost over? So this is where your trend line comes in. Now, in a downtrend, I need to begin to put some text down. In a downtrend, what you need to consider is that if you are in a downtrend, make sure that you use the opposite. Down is up, right? In a downtrend, the opposite is up. That the opposite of down is up. So in a downtrend, position your trend line on top. That is up, not down. It's a downtrend. Position your position trend line on the upper chart. Okay, I will explain to you what I mean by this shortly. Then in an uptrend, the reverse is the case. In an uptrend, position downtrend. This is uptrend. I want to edit the text. Okay. In an uptrend, what you do is you also do the opposite, as I said. In an uptrend, what do? Do the opposite. You position your trend line below the chart. Okay, you position your trend line below the chart. So, and I will explain it to you now. I will show it to you what I mean here on the chart. Position your trend line. Position your trend line below the chart. So, trend line below the chart. So let me show you on the chart what I mean. Now, if you check here, you have lower low, lower high, lower low, lower high. So this is going downward. What we do is let me take this out. Let me draw a new one. So it says if it's a downtrend, you position it. I will not fit it properly now. I will just draw it for a reason. So I position my line downward. Then if it's an uptrend, this is an uptrend, you position it. Let me move forward a little. Yes, this is an uptrend here. It's going up. That is after, I'll explain this one too. There is a trend there. But from here, you have an uptrend. You position it down. Okay. Now, why do I do these two? I will need to explain these two first before I proceed. As I said, I did not fit this. There are some rules of fitting the line, but just follow this first before I explain the rule of fitting the line. So you need to, in the downtrend, you need to position your line above the chart so that when there is going to be a break of structure or a change of character, whatever you call it, that when the trend is going to change from down to either sideways or up, the line will easily highlight that to you. How will it highlight it to you? So now this brings me the rule of actually connecting of fixing the trend line. Now I'm in the 15-minute time frame. If I am in the higher time frame like monthly, weekly, the way I will join the line is different from what I will join from 1 hour below. Again, why? From 1 hour below, the wicks, what we call the wick is these lines you see protruding out of the body of the candlesticks. The wicks in the lower time frame are noisy. They are not as reliable as the higher time frame. Let me explain that to you. I will pick a weekly time frame here. On this weekly time frame, I would circle a week. Let's see. Let me circle this week. Let me use a bright color. I circle a week here. Okay. Let me adjust it a little to just cover. You could see that the circle here is just on the week here, right? Now, if I move downward to the daily time frame, sorry, go back to the weekly. I want to see the date. This is August 2019. On the daily time frame, let's go back to August 2019. 2020. Good. Can you see the circle I drew in the weekly time frame? When it got to the daily time frame, it's not just a wick, a line. It is there are some bodies, some candles formed within that wick in the lower time frame. So what I'm trying to explain here is that what you see above, let me come to the front here. Yes, this is where we are. If I use this wick, similarly what I did the other time, if I use this wick as an example, if I shift to lower time frames, okay, these are most recent one. If I shift, this on the daily chart now. If I go to 4 hours, let's see what happened. In the 4 hours, you could see that there are also bodies of candles that formed in here. If I go to 1 hour, the same thing. Look at this entire candle consolidated into just a wick in the daily time frame. So that's why in the higher time frame, the wicks are important. You use the wicks when you're connecting your lines, but in the lower time frame, it makes little or no difference. So you don't consider that. So below 1 hour, I use a different form to join my lines, but in above 1 hour, like from the 2 hour, 4 hours, daily, weekly, I consider the week. It depends on what work for you. Okay, so back to the 15-minute time frame. To plot my trend line, I will use the line graph. So this will allow me join these points as multiple points that this will touch. First is the first two lines here, you see, is touching the top of these two. So this has given me my trend. Then I will extend the line downward. What was I looking for? I am looking for that point. There are so many things I'm looking for here, and again, this will begin to lead us into the use of the tool. I'm looking for that point that it comes to this line. That is, the market reacts along this trend. Okay, if it reacts along this trend and it did not break the trend, all I do is I will take a sell position. As I said from the opening, I said the trend line is your friend. So the trend is your friend. When you see, and when you in a downtrending market, you only look for open position to sell. Now from here, I joined this, I fixed this. If I see, after fitting the line, I notice that, hey, this did not break this structure, then automatically I will go in for a sell position. It begin to come up again, consolidate up. Then at this point, if I'm in a trade, I would have exit. And here, I will need to wait to see what happened here when it approaches here. There are so many things to consider. You have to consider the chart pattern. You have to consider some type of candlestick that were forming along this region. We will see that later on. So here, it breaks it here now. And then after a while, it came back to it. These are decision-making moments. Okay, when it breaks it, what do? I will not rush into buying. Okay, maybe there is a change of pattern now that maybe is uptrend. No, because wait for it to resist. Wait for it to retrace. When it retraces back and bounces off, that is when you consider a valid entry for you to take a buy. Otherwise, it will the trend continues. Okay, so here, as we said, it came back here, pierced it, retested it. From here, I can take a sell, because I will also tell you some other things along it. I will take a sell here, and then whatever my entry rules we talked about in our last video, we talked about the sets where you study the market, look for your entry position, set your take profit target, and also your stop loss. So applying that rule here would actually not give me any error here. If it goes against me, it cut me off with little or minimal loss impact. So, but what is interesting here is that at this point, there was a change of structure. You could see it begin to form higher high, higher low, higher high, higher low, and then there is an uptrend here. Okay, now let me go back to the candlesticks. So if you also check, if you don't want to change to the line to fit your graph, what I do is that when you have a candlestick going up, the height it reached would be that connecting point of the wick and the body, the upper body. That is the last green candle going up. If you check here, though I draw this from the other side, if you look through here, you see that this ball is sitting exactly at that intersection where the wick and the body touches each other. So that will be my starting point. The next one here that I connected it to, did you see again that the line passed through exactly that point where the wick connects to the body? So with this guide, in the lower time frame, instead of me switching to line graph or this, I can use that approach to fit this line. Okay, let me show you another similar example, then I would revert. Now the example I will show now, I will do it from the lower in the uptrend. There is an uptrend here. I'll fit it from the low, then I will check the line and see what happened in the line. So for downtrend, I'm actually connecting the green. For uptrend, I will connect the reds. I'm looking for, okay, for uptrend, I will connect the red. Now let me fit it here. You know, this one I dropped it there before without so I'm taking it out. Now if I need to fit this now, what I will do, I just want to test for you to know that you can use the trend line, you can use the line graph, or you use the candlestick directly. Let me, which is the low here? Okay, this trend, this is the low here. The lowest here is this red candle. I stay at the intersection, then I move it through. Check this one, it went up, it came down again here. I'll move it through this that red again, the body of that and the wick. So this is my fitting for this one. Okay, this is my fitting for this one. If I switch to line, what happened? Did you see that? As I said, it joined. As I said, it joined from this point and also this point. There is a join. You see, I did it through the I did it directly from the graph, and then when I check the line, that is what exactly happened. So in the low, if you are going down, fit your line from the green. If you are going up, fit your line through the red. Whichever works for you. You can easily switch here and then connect the lines, or you connect it directly on the chart. Now, why, as I said, I fit this line to guide me into my entry positions, whether I need to enter for a sell, I need to stay off the market, and then when the structure changes completely. Good. I have shown the two type of common trends that is advisable to trade. Yeah, I showed you the downtrend. I also showed the uptrend, even it's a short one here. In this case, what I do is immediately it's breaking off this and it is confirmed, I take a buy position, and when it returns to it, I'll wait to see what the market will do next. If it's confirmed it's going up again, I take a buy position. In this case, for example, the market is still sleeping. In this case here, I need to make market decision here to take a buy position here, which could go whatever distance. That would actually go into, we consider our risk management, we consider so many other things. I'm marking these zones in the 15-minute time frame to take the trades here. I need to go to 5-minute time frame and see that, okay, within here what happened. I had an engulfing here, then I can take a buy. I had an engulfing here, I can take a buy, even though it's a short one. You understand? So this is how to do this. And if you, again, downtrend top-down analysis, starting from the weekly analysis, daily analysis, 4 hours, this. There are other rules that we combine. Not only that, But what I'm trying to outline for you is to show you the power of this trend line, how it can make you keep you in market easily, because it is something that is respected. The market sentiment respects these trend lines. They are positions where the market reacts. We've talked about in one of our, we talk about support and resistance. If you have not watched that, look it up in our channel and watch it. In support and resistance, that's where we mark key zones. Note that there are different type of trend line. This is one. This is horizontal ray, mean is starting from a point. If I want to mark this from here, you see it marks forward. And you have this one, the horizontal line. If I want to fit it here, it fits across the entire chart, left to right. Okay. This is not now. When do we use this different type of like the horizontal rays? Where do I use it? When I want to make a channel, a horizontal channel. In this case, not. Okay. Let me first of all use the trend line. For here, if I join these together, I can make a trend like this. Then I can do another one underneath it. For example, I will explain this to you. I make another trend like this. So these are horizontal. As against this, in this situation where you have the market reacting at certain zone, advisably stay out of the market, because it could break up, it could break down. Okay, you stay off the market. It's not too clear for you to take a reliable trade up or down. Of course, the people the people that scalp could actually take advantage of this in lower time frame, 1 minute, 5 minute, 5 minute preferably. 5 minute and 15 minute setup. 1 minute is too volatile for you to actually calm down to think and take action. If you are using 15 minutes and taking your trade in 5 minutes, you could also catch this, that okay, this is breaking away from this down support, then it might be going up to the resistance zone. Then you follow it. If it's breaking away from the resistance zone, it might be going down to the support. You follow. Though these are just quick and short trades. Okay, so and you can easily lose your money. For example, look at the example here. If you see this zone, there was a likely breakaway from the resistance zone here, and all of the sudden it turned and break it. Okay, similarly here, we are expecting, if we are using the rule that anytime it touches the resistance zone, then it's going to the support. And here, when this came here, you quickly enter for a sell. Look at what happened afterwards. So, as I said, all the rules, make sure that you stick to the rules. Let me write our rules here again. We call it sets. Okay, sets mean study the market, which we just did now. Then perfect entry position. Then you have take profit target, and then your stop loss. This is pure risk management. It is pure risk management. If I come to this market, for example, this is 5 minutes. As I said, I can analyze anywhere because I trust the power of Trendline. Now, I analyze here. I fit because it's a downtrend, as I see. I fit my line here. Cutting through. Yes, cutting through the next. The immediate 2, you make sure that it cuts through this. If I switch to line again, just for your confirmation, you will see that it touches the line here. Yeah, then you adjust this a little to also touch the line here. The first two line is connected. The first two line is connected. Okay, I return it back. So check the candle. Oh yeah, the green is the green you joined for down, you join the green. So I connect the lines here. Now, why do I, as soon as I entered here and I see that there is a confirmation for me to take a trade, I will enter my trade, use my whatever rule I need. Usually advisably we go 1-to-2 reward ratio. You can get 1-to-4. Again, this is also dependent on what wave combine. Remember, when we talk about trading, we don't use only one confluences. We use multiple confluences to make confirmation, because you are putting your hard-earned money there. Otherwise, if you just jump into the market and then some of them you win, most of them you lose, and then within no time you are out of the market again. So that's why there are multiple confluences. For me, because I'm experienced, I know what tools to combine. Before I take a trade, some of the trade I'll do 1-to-1 reward ratio. If I'm taking trade within this region, is 1-to-1. If I'm taking trade, which I don't also do, I don't, once I see that the trend is finished, there are other confirmation that will tell me the trend is ending. Once I notice the trend is ending, there is no need to waste my time. My time is precious. When I dedicate my time to take a trade, then it should come out rewarding. My list is 1-to-2. I do 1-to-4 reward ratio depending on where I am on the chart. And if you are following our videos, you've watched our previous video, we talked that there is a video on alot wave theory. If you understand that, you will know what I'm inferring here, that when to take 1-to-1, 1-to-2, 1-to-4 reward ratio in your trading. Just for benefit of others, but go into the look for the video and watch. I made the video. Look for the video on alot wave theory and watch. You will understand. If you catch the wave 3, if you catch the beginning of wave 3, put your risk to reward ratio 1-to-4. If you catch the beginning of wave 3, put your risk to reward ratio as 1-to-4. If it's wave 1, that is 1-to-2. If it's wave 3, that is 1-to-4. Wave 5, as I said, I don't trade it. It's very tricky. You could do 1-to-1 there again as well. Wave 1 to 2, wave 1 going to 1-to-2 reward ratio is fine. Wave 3 starting, wave 2 going 3, that's the third wave, which is the longest wave. You can trade 1-to-4. 1-to-2 is sure, 1-to-4 yes, but wave 5, that's the last wave, I prefer not to enter the market. And if you are sure you want to enter, you just do 1-to-1 reward ratio. That's one confluence that, okay, the difference again here is that as experienced traders, if I enter this market, I don't even need a trend line. I can fit what is happening just with my eye. Looking through, I will know that, hey, this is this. Then I already have an alot wave count on the screen without plotting them. Then I know what to do. Okay, because talking alot wave, let's look at something here. Here, in this uptrend, when the trend was ending here, we have the wedge formation here. This is this is a wedge. Just want to draw this. There is a wedge here, which is indicating there is possible. This is not what I actually want to draw. Let me take it out. Let me use the right tool here. Okay, we have a triangular pattern forming here. Okay, and then change the color to white. Then you also had on the same place, you have a pole here. This is a wedge. Then, but what happened? There was a break up, fake breakout, retest this and this. So I got another formation here, which is why I picked this before. I have an M pattern. Forming here, which is a reversal signal for me that, hey, there is a wedge, there is an M pattern, then automatically this line was broken with this. It was broken here, and then I had a retest. I had a retest of the region. It came back from here. It came back towards this area, then it began to go down. So for me, automatically, I would take this first run, this run to here as my wave 1. Okay, so what happened is, now if I put where is the Elliott wave? Let me check here. Elliott ellipse. Okay, it's not here. Let me look for it. Patterns. So this is the Elliott wave. So I'll say this is my 0, this is 1, this is my 2, this is my 3, this is my 4, my 5. 5 should equal this length. If it's not, this is not 5 yet. I think this is where 5 eventually formed. Okay, but the most important, as I said, 5 is trickish. I don't trade this. So if I see that this pullback happen and it begin to come down again, I will enter 1-to-4 reward ratio. There are, as I said, watch the, I'm not giving you the details here. Watch the Elliott wave, our video on Elliott wave, to understand how to do the count, and also the what is involved, what is a valid Elliott wave count. Let me change this now to another color. Stay. Okay, so here what I'll do is, here, let me now see my shot from here. I said I will do 1-to-4 now, because it is confirmed that it just came off the neckline here. Let's say this is the neckline. So you place your stop loss above there, starting from here. Now 1-to-4, my 1-to-4 would actually be sitting 1-to-4 reward ratio is sitting here. Okay, so this trade, within no time it will execute. Okay, but how far did this trade go? If you check, it even went as far as, wow, this went as far as 1-to-19. 1-to-7.5 reward ratio, which is almost 1.8. But if you want to, like, okay, in case this decide to turn back and do a triple top, then placing your stop loss here will give you 1-to-2. But because it's confirmed, and I have, meaning this is the essence of using other confluences. My confluence is telling me that this is wave 3, so I don't need to pull that long. What I will risk is less. I will risk less because I know it will not hit me out. Wave 3 would complete. So this is the best wave. Anybody that understands the wave theory, this is the best time to enter any market at all. And as I said, I don't necessarily need to plot this on the chart before I know what I need to do. This is one. Now, supposing I don't want to use the Elliott wave as the confluence, I also have another confluence, the Fibonacci retracement. How do you plot that? Also look up for our video on Fibonacci retracement and see how we use it. We use how to use the Fibonacci retracement, how to use the extension. This will help you a lot. Just as a summary and intro for you to look out for the video, this Fibonacci retracement will do nothing but give you some key levels. It will give you some key levels. And how do you draw it? Again, depending on the time frame you are in. If you are in a higher time frame, consider the weeks. If you are in a lower time frame, take out the weeks so that you don't have much noises here. Now, I do this. So what do? If I come into the market, I have my Fibonacci fixed. It is downtrend. This is 0. It goes to 23, to 38 first. It retraces back to 23. This is the natural movement. From this, immediately I see that this happened. And how do we draw it? We draw it from the last low and last high. You saw when I was fitting the Fibonacci retracement. I fit it here, and then I will use it to read the movement of the market. You can also apply it here using this low and this high to read this. Now, what happened? It went to 38 region and it gave back to 23 region. From here, I see that it's coming back. Then I'll take my trade and target the 78 region. Wave 3, you target the 78 region for wave 3. So, which is exactly almost the same thing that the alot wave gave me. So, if I enter my market here, the 78 is here. I want to see 78 is here. Then just above this 23 zone, which is here, is where I'll put my stop loss. Let's say here. Look at the ratio, 1:8 risk to reward ratio. So again, what was the starting point? I studied the market. I saw it's a downtrend. As I said, as a professional trader, I don't need to fit the line to know it's a downtrend. The second thing I did was to look for my entry position. My entry position comes in where I use the Fibonacci retracement as a confluence, or I use the alot wave theory as a confluence. Now, what's my profit target? If I catch wave 3, my profit target minimum is 1:4. If I didn't 1:4, if that's using the alot wave, if I use the Fibonacci retracement from 23, I'll target 78. So either way, and my stop loss will just be a little above the entry point. Okay, so either way, it is benefiting. Again, we are talking trend lines. Now, let me remove these confluences and go to the rounding section of. I promise I will show you another trick of the use of trend line. So trend line, because of its power, we have this one called the channel, the parallel channels. This is the parallel channels. This is how it is. Okay, in just one shot, you have the upper bound, lower bound. You can use it for different things. I can use it in the horizontal market to decide, okay, let me fit it into this one. In the horizontal market, to determine support and resistance. To determine support and resistance in the horizontal market. Okay, here, clearly with this, let me change something. I actually dim the color, make it brighter. Okay, give it to. So you can use it to define your dynamic, your support and resistance zone. So here, this is the resistance zone. This is the support down here. You see and then you have the middle line. The middle line is let me brighten it out as well, so that this is the middle line. Let me use okay. Use this color. Okay. Okay, so you could see the midline. The midline also, when you fit it support and resistance, the midline also tell you a lot of things. Look at when it came through here, it breaks through it, it retested it, went up, retested it, went up again, break through it, retest it, and this. So these are depending where I fit this. If I had fit this in the, let me go to weekly time frame, if I see an example of that. Yes, in the weekly time frame, if I fit this parallel channel, It's just for analysis. Let me say I fit this channel like this, straight line. Yeah. Then sorry, not the up one is not done yet. Yeah, because it's higher time frame, weekly. I fit the trend line like this. I have the midline here. Then I step down to the daily time frame. Let's look at this trend line we have fitted. Did you see? This is resistance. Is resistance. What happened at the midline? The midline, you also have market reaction. You see, towards the midline, this turned. Here, it was retested and it bounced back. Here, it become a dynamic support and resistance here. So it also give you some insight. And if I even go lower, as long as you can see the line, you will see that market is reacting at each of that zone in different. You see market reacted here, it formed a resistance. Then here again there is a market reaction. So this is the power of the channel, using it as a support and resistance in a horizontal market. Now, this is not where I'm going. Let me go back to the same tool in a trending market. I'll take this out. Now, if I zoom out here, in what we described before, you could see that this market is trending downward. And I say if you are using the line for downtrend, you connect the green down, right? You connect the green down. If you are using if you are using this, then it's easy for you to spot the trend and just fit it. Similarly, you can use this channel tool like that. I fixed, you could see I'm joining what is joinable here. You can do just few here, then I'm joining it here as well. Then you go to the settings and you tell it to extend right, because this is what I need. So once you do this, what it will guide you is that, as I explained before, as long as this is trading within this channel, then you can do your take profit and stop loss respectively. You pick here, you are able to spot this point and you enter your market. Your take profit target will be towards where it's touching this channel. Then from here, because the channel is already defined and formed, this is, even though I say you should not trade don't trade the retracement, the pullback. Don't trade the pullback in the trending market. For experts, you can actually take a buy from here and then you take your profit here. Okay, so this is one. Let me return it to this. So you could see what is happening along the trend lines. You are having this support resistance type of a thing. Now, when at this point here, something happened. Instead of testing and coming back, it break through. It came back towards it to this is more like a retesting journey. Then it did a sideways market, and then it's beginning to gradually, we can't tell here whether it's going up, but gradually something is happening. So what I do is that I place another trend channel here. I would go to the down, and again, since it is going up, we use the we connect the reds. Just fit it in like this, then come up. From up here, you have to connect the green. Up is supposed to be coming down. And if I use the most recent, this is the most recent high before this one. Ignore this might be as a result of news. So and it's extended right. You can extend it left by just dragging it so that you are sure that it is sitting at the point you want to use to enter. Here the green, here the red for up. Again, put it to line to confirm. You have some touches here, touches here, touches here, touches here, and so on. So back to the candlestick now. For me, let me move this away. Uptrend, do this. Downtrend, do this. And then this is our rules. So for me here now, what will happen is, if I look at this is in the 1 hour time frame. Anytime I'm around this zone, I take a buy because it's an uptrend. Take a buy, take a buy. And when it's approaching this zone, if I'm watching the market, I will exit the market and look for a sell opportunity but within this channel, which means if I'm taking a sell here, my take profit would be around 2159. If I'm taking a sell here, I can't again do a take profit of 2159. If I do a take profit of 2159, I will never get there. I'll take my profit along the channel. I'll take my profit along the channel, and so on and so forth. So again, this is more stronger because it guides you perfectly. I could achieve this with 2 trend lines, right? I fit this one, then I come up here again, I pick the green, I fit this one. Okay, this is a possibility. The difference is that the shape this is giving me is not giving me something that will take care of the noises and something like this. Okay, if you check, this will consolidate likely, because you see it's there. As the more I go, is converging. The lines are converging. It's going to give you a certain shape. It's also possible that it can trade within this channel, meaning the next upcoming here will not break this line. It will respect this line, come down again, and then you have your final a break. So this is trend line in brief. If you are new to our channel and you have not subscribed, please hit the subscribe button. For both old and new, hit the like button so that to encourage us to do more free videos like this, where you can instantly begin to make money. Let me see if we could check this on any live. Okay, good. This is live now. Let's go to 5 minutes. Come on. In the 5 minute time frame, what we will do, if we use all the things we have learned now shortly, let me delete this. Fit the trend line. You have 2 options. You can use this directly to fit what you currently have here, or you use the channel tool. So I'll prefer we use the channel tool. Now, what I want to do is I will come back to analyze in 5 minutes. Let me see 1 hour. Already we know it's an uptrend. We already have fitted it, but I want to do scalping. So I will use this small one. I will do a different line here. Yes, this is connecting the reds. Then this should connect the green. In this case here, I will change some settings here to differentiate it from what we have here before. Let me use this color. Let me reduce the size. Okay. Let me also change the extension. I'm not extending right. Okay, I just need it for a quick overview. So now I have fit this in the 1 hour time frame. So let's go to 15 minutes and see what is happening. In the 15-minute time frame, is this respected? Is different. So, but what is there is that for the 1 hour, let me do this. Okay, you can adjust it in the 15 minutes to touch these lines. Yeah, let's adjust it. Then this is too high. Sorry. So I want to adjust it to so that we can look at, yes, it's touching this now. Okay, so now I'll go back to the candles. Then I want to look for entry positions. Go to the 5 minute time frame. Here you have the market. It came down here and it's coming back out. What I have seen here, I have seen that these two candles combine engulf this candle and is reacting from here. So I will be targeting a buy. Okay, let's do this. I'll be targeting a buy from this point. Now my stop loss, as I said, will be just below this, and my take profit, I have two options here. If I'm targeting at this line because it has been resisting from this line, I will have a ratio 1:5. If I say no, there is possibility it goes up, I can take at this point do ratio 1. If I stop at this point, assuming it's breaking and coming here, this is what ratio 1 to 3.4. It could, because the market is not going to be a straight line market, it can consolidate. So the more it consolidates, the possibility for this to go up. So I will do 1 to ratio 4 and keep. So this market, if you watch this, if you are lucky and you watch this early, you can, or either you watch it now or you go back and check this market, how it played out eventually. This is 1 to ratio 4 risk to reward ratio. If I place this market, I certainly, this, the last low here. So below the last low, this is ratio 1 to 2. Let's do it 1 to 2 reward ratio. 1 to 2 reward ratio would be here. Yeah, 1 to 2. So this is 1 to 2 reward ratio. So which means the market, we are hoping that this market is coming to retest this zone. It will not break our stop loss and is going to move up at least this length. So this is how to use the tool. And yeah, as I said, this is a scalping one, a quick one, because I had to go down below the I go below the 1 hour time frame to take my analysis. This is where I will put a stop to the video. I hope you enjoyed it. If you enjoy it, please show love. Go to the comment section, say hi. And if you would like us to treat any similar trading tool of your choice, maybe you are struggling with any of the technical analysis tool, please leave your comment in the comment section. We will work on it and then get back to you. Have a nice trading day and week ahead. Thank you. Bye-bye.